So looking ahead to this week started April 6th, the big deal is probably again going to be oil prices. We saw the biggest daily gain ever last week, a more than 20% gain for the day for both WTI and Brent. And so that was all in the lead up to a OPEC meeting that we're going to have on Monday, where possibly they are going to cut output by 10 million barrels a day. That's at least what Donald Trump tells us is going to happen. That would reduce oil supplies and be good for the oil price. The other thing I want to concentrate on this week is the British pound. It's been having a great couple of weeks. That's a big rebound from the 35-year lows it hit against the dollar in the middle of March. And so we want to talk a little bit about why that might be happening and if it's sustainable. Now, before I get to all that, let's just have a quick run down the economic calendar. So first on the list on Monday is the OPEC meeting. That we will discuss in a little bit more in detail in just a minute. There's also the RBA rate decision. Central banks are moving between meetings anyway, not such a big deal. They've already hit their lower bound at 0.25%. Currency reserves data could be of interest, particularly looking at the Swiss National Bank here. We saw sight deposits data for them that suggests the Swiss National Bank are heavily intervening in the Swiss franc. So we'll look to see if they've lost some of their currency reserves in doing so, or built up in fact. Crude oil inventories, I will discuss more in just a minute. FOMC minutes, bit rear view mirror stuff. Again, the Fed is just seemingly intervening in new ways every day, so they are a bit old hat. And keep in mind, it's Good Friday on Friday, so that will apply to the Eurozone and to US markets. So I mentioned in the economic calendar the inventories data. We saw 13 million barrels being added to US inventories. That's a massive build. It's unsustainable on a weekly basis if that keeps going. Basically, they're running out of storage for oil in the US. And we're getting to such a crazy point that actually some oil producers, maybe some shale producers in Texas, for example, may actually have to even pay to get rid of the oil that they've just produced, and effect a negative oil price in some parts of the market. That was obviously unsustainable. It seems like Donald Trump has come to the rescue of the industry and managed to bring Vladimir Putin of Russia and MBS of Saudi Arabia, Mohammed bin Salman, the Saudi Crown Prince, to actually forge some sort of OPEC plus deal, potentially even involving the US. We don't know yet the full details on this, but it might involve 10 million barrels per day coming out of the market, which would be a big reduction in oil supply and help shore up the prices. So we'll wait to see if that all actually materializes. There's a lot going on in oil prices. It's very volatile, and so a great trader's market. We'll switch gears to the British pound. We're up in 1 month highs against several currencies, the Swiss franc, the euro, I think. It's been a really good couple of months. I think one of the key reasons here is that traders are just putting two and two together here and just assuming that at some point Prime Minister Boris Johnson is just going to have to probably capitulate and say that actually we cannot get a trade deal with the EU by the end of the year without just going off a cliff edge with no deal. And so by that means he probably has to extend a Brextension, if you like. And so there have been rumours about 2 to 3 years. That's the kind of thing that the EU are talking about. Certainly, I don't think the UK would want another 2-3 years of uncertainty of being middle of the road in the European Union. Nonetheless, that's just possibly what has to happen while the economies deal with the coronavirus. So that's been generally thought of as a good thing for the British pound. A couple of other things I would note is that the Federal Reserve have done a couple of major measures here to intervene in the FX markets. Repo operations, also big swap operations. These things are basically all aimed at offering alternatives to people going into the open market and selling securities in order to get dollars for liquidity. So one of the things they've been selling heavily was just British pounds. But with all these swap operations, actually, they can do things between the central banks without having to sell pounds on the open market. So that's helped the pound quite a lot. So two big considerations there about why the pound has been moving higher. Okay, that's it for this week. Thank you very much for joining. And if you do enjoy these videos, please make sure to sign up for LCG and myself on YouTube and social media.